All right, good afternoon, welcome, or morning. Welcome back here to Trader Minute. Great to have you aboard. Want to go out and take a look at the challenge watch list here with you. I know I haven't made a trade here in a little bit, and a lot of that is because of things we've talked about in terms of option pricing and risk reward. And I've had exposure. I've had 50% of the challenge exposed through this environment. With Adobe so far, that hasn't paid off. And Adobe's been chopping between this, in this kind of 25-point range here. I still think we're going to be talking about Adobe trading substantially higher, but it is still not had enough to thrust out of this range element here with it. And so it's one of those where I go, okay, my next, I need to be a little more cautious, make sure I'm not just buying the same thing, right? And in this market, there's a lot of that. I could go buy Visa. It's kind of the same thing. Right? Oh, yeah, I know. It's up 60 cents today. Great. It moves to different magnitudes on a day-to-day basis, but the overall pattern is identical. And what it's done is almost identical. And there's a lot of that out there in the market. And, I've been waiting and going, okay, when do things shift a little bit? When does, when do the winds of change start to come in? And we're starting to see some signs of that. Not enough to get me to jump in and be aggressive. And, one of those is option values are just, they're high. Now, for a lot of stocks, they've come down because they've had earnings. But some of the implied volatilities are still up there, but they are a little more tradable than what they have been. So I want to go through, not every, but some of the stocks on my watch list, and I'll kind of a little bit of disclaimer here. I'm willing to trade stocks that aren't on my watch list. I just don't watch them as closely, and I have to have an absolute perfect setup in order to go and get into them. So some of the names that I'm going to talk about, you're going to go, oh, that's familiar. I've heard of that one before. Some maybe a little bit different, but this is based after the last earnings season and what we saw throughout that season, or what we are seeing throughout this season, and some of my fundamental biases that are here with them, and some of the things that maybe fundamentally we can make different arguments, but technically I think there's something really interesting shaping on up. Let's start with the bank sector, and I just have two, JP Morgan and Bank of America, and these things are very simple. In fact, I don't need a single indicator for them, right? To me, these stocks are cheap. They're inexpensive. They deserve to be higher, and they deserve to be much higher. Okay? Now, they've been in a longer-term consolidation pattern. Bank of America, JP Morgan. I mean, it's been, it's going on now, 11 months consolidation pattern after their, end-of-year run last year. They've pulled back with the, with the overall market. And here this week, they've had a thrust off the lows. The nature of this thrust is plenty enough for me to say, look, bottoms are in. Bottoms in. And to expect it to go higher. But I look at this thrust in this type of fashion right back here in May, or this type of fashion right back here in July. And I have to say to myself, okay, which one is it? Which type? I mean, does this go straight back up? Or does it have a little bit of pullback back into it? Right? And so for me, this just becomes really simple. I don't want to chase it. I don't want to chase into it. I don't want to have to wonder what to do with it if it dips to 107. Don't want to be in that position. Not when options are priced the way they are now. But if we go and we put a retracement on this, we can see that the retracement levels are between 105.5 and 107.5. Right? So they are in this range right here. And that I shade in yellow. Now, ultimately, these retracements can shift. If we see JP Morgan make another thrust up, let's say to 112, then, we'll have to adjust the retracements. But right here, this is where I would expect a pullback to pull back into. Maybe a one-day thing, maybe a two-day thing, maybe a week-long thing. So I'll wait for that pullback into that retracement area. What would that do? That would create then a higher low. And we get confirmation that that higher low is in, whether it be by volume, whether it be by a gap above the 7-hour moving average or a gap above the 7-day moving average. There are several things that could be telling with that. That'll be my opportunity to get in. This thrust right here, no, I couldn't say the same thing. But what we've seen this week out of a lot of these things is a little bit of a different nature. And so when I look at JP Morgan, when I look at Bank of America, which is the other bank on my watch list, right? I'm bullish and I expect them to go higher. I expect them over time to trade higher. But from a risk-reward standpoint, what do I want to see? What do I need to see? Well, I'm starting to see the first part of that kind of stability coming in. On the next pullback, especially if it's on low volume, option values, they will get cheaper. Especially if it's a slow pullback, meaning it's 20, 30 cents a day for 3 days. It would be a nice thing or nice, boost or drop for option values there. And, we'll see if that comes into play, but that's what I'm looking for. And you'll notice it's going to be a common theme for a lot of the stocks that I talk about, right? On my watch list, I have what I kind of consider to be my China material names, right? And one of the names on that is Caterpillar. And, Caterpillar's been boat raced. It has absolutely been crushed. This gap is a serious gap, right? This is a serious gap. Caterpillar, yes, it's had a bounce. But there's more technical damage here with Caterpillar than what there's been in some of the banks. And so I need to see something a little bit better. A little bit of dip isn't going to get me to want to say, well, you know what, I'm pretty comfortable it's going to hold. So I need to see something a little bit better. What is that? Well, I'm not exactly sure yet, but it's probably going to take some time. So the chances of me getting into Caterpillar this week, next week, or even the week after are pretty slim. It could just go straight up. If it does, I'll miss out because I won't have a great risk reward. But overall, this is something where ideally I'd love to see it come back down, maybe even push into a new low and then snap back up and be able to buy it in that type of situation. But this is a very different situation than the banks. Now, I'm also willing to short Caterpillar. I'm not willing to short the banks, but I'm willing to short Caterpillar. If Caterpillar decides that it just wants to rally right back up into this 130 area, and it shows a little bit of topping volume, well, you know what? That is a retracement area for Caterpillar. Oh, sorry, let me get the regular retracements. Here we go. But this kind of 130 area, that would be the first retracement here for Caterpillar of this drop. Would I be willing to short it up here? I wouldn't feel super comfortable with it fundamentally, but if I was looking in the market where, a little shifted and, we start to see a little bit of erosion and I get some sort of gap down below the 7-hour, yeah, I'd absolutely be willing to short it. Bank of America, JP Morgan, no. Not willing to short. Caterpillar, I'm willing to get long. I'm willing to get short. And the October action to me with Caterpillar says, look, don't have a bias on Caterpillar. Trade the extremes. Trade the extreme up, trade the extreme down. And that's what I'll be looking at with Caterpillar. I'm not going to be looking for a trend formation or a brand new trend to trade, right? This is probably something that has this type of action ahead of it, right? So for me to go and say, well, I'll buy it on the next Katie signal, well, that probably happens up here and there's probably very little upside left. So for me, this is about trading the extremes higher or lower. And with most of the plays that I kind of call my China plays, that is what I'm looking at. The other stocks in that group, U.S. Steel reports earnings here, I believe after the bell today. So, this isn't something I'm going to be able to get into anytime soon. But I put it in that Caterpillar category. I'm willing to trade it up. I'm willing to trade it down. But I want to see those extremes come in. And I'm willing to play the snapback. FCX. We saw the earnings on FCX. This is one where I look and I say, okay. I'm not willing to short FCX. I think the valuation is too good. I think what's going on is a little bit too positive for the story, and I think this has been unjustly ripped. Not uncommonly. It's common for Freeport to get ripped in these scenarios. But this is one that I am willing to be a buyer and to play for a trend, and even to play for a move back here to this $14.75, $15 area. What do I want to see? Well, we've seen a lot of what I want to see. Today, we're gapping above the range for the last 1, 2, 3, 4, 5, 6, 7 days. So what do I want to see? I want to see this level hold. And I want to see this level, this 1175 level hold. Could I go buy it right here off of 1175 and have a decent risk reward? Yeah, for the first time I could, right? And so this is something where I could be in later today, maybe tomorrow, maybe early next week, depending on my risk tolerance. But it's giving me what I want, to go ahead and get in, and has an actual decent risk reward scenario. Caterpillar have a decent risk reward scenario. If it pulls back, what do I do? No, it doesn't. FCX is giving that, and it's had this nice little base out period. We saw the earnings, rallied initially, sold off with the market. It's been highly tied to the market. Today, U.S. dollar dropping and Freeport gapping up. Okay, but this is one where I think if we look at the earnings, we look at the story here with Freeport McMoRan, I think there's a $15 stock. I mean, they have a PE ratio of 9. They do have some growth concerns. They're trading at about 2 times book, so they're not very expensive when it comes to that. And I wouldn't be surprised to see some companies as we go forward into year end and the beginning of next year taking a look at Freeport McMoRan as a possible buyout. Now, I'm not saying it's going to get bought out, but I would not be surprised to see that chatter start to happen when it comes to Freeport McMoRan. And, so anyway, with this dip, I kind of look and say, all right, 15 is about where I expect it to go. Now I just need a good risk-reward scenario. And, if it were to close around 1190 today or something like that, I think that'd be a very intriguing entry point here for Freeport McMoRan. Now, also on that list of kind of my China-related names, Vale, which isn't as China-related of late, as it's been a little more Brazilian-related and some of the stuff going on in Brazil. But you can see the EWZ. While global markets have been dropping here in October, Brazilian markets have been rallying. This has been one of the very few markets around the world that has actually gone up in October, not down. And it's gone up by a lot. I think that tells us a lot about what's going on going forward. And I think if you're looking for a market that is going to outperform going forward, I think October told us Brazil has a lot of room to the upside. And, they may have finally sorted out some of the stuff that's been holding it back for many years. But if you kind of just back this chart out a little bit, here into a monthly, you can kind of see this has been a multi-year consolidation, right? Pretty much since the 02 to 07 rally. Been one of the few markets in the world that hasn't hit new highs after the financial crisis. But one where, if you followed what's going on there, it's a very interesting situation. I think the argument can be made that it has a long way to go to the upside. And I just wonder if we don't see Vale trade up around the $20 to $22 range. Now, what do I want to see for Vale to get in? Well, preferably a KD signal or a trend rider signal, okay, to go ahead and get in here with it. But also in that group would I throw BHP. Now, BHP is very gap happy, but you know, to me, BHP is kind of the bellwether in this space. If you're going to make a bet on China, BHP may be one of the best ways to do it. And you know, it's trading at a PE of 13 right now. It's trading just over 2 times its book value. And you know, this is one of those companies that may look at FCX and say, FCX, I wonder if we can pick it up for a song. And, you know, would not be too surprised to see it. Within this space, and I'm not going to trade this stock just because the options on it are never any good in terms of the spreads, but is Rio. And, you know, we talked about Rio a week or so ago, and as it was going down, as the market was in turmoil and chaos, Goldman Sachs came in out and upgraded Rio to an outperform. And, you don't see that very often. I think that was very telling, that there's something really going on here in this space and in this group that is, you know, pretty darn positive. And I think that can apply to BHP, FCX, Vale, Caterpillar, you know, going forward. So that space, those are kind of my stocks here in that space. Now, in some of the U.S. consumer space, my favorite stocks, you've heard me talk about Nike. You know, you've heard me talk about Nike a lot. You say, well, what would it take for you to get in? I'm willing to buy it right here, right now. Just from a pure, hey, you know what, chart standpoint, we've had the pullback, nice little gap up the other day. I can play it expecting that gap to hold, right? And if that gap holds, I'm good. So that's kind of how I'm looking at Nike. I could get in. It's just a matter of, do I want the exposure? But I love some of the action that it has. Now, it doesn't have a higher low yet, right? Doesn't have a higher low yet, which does concern me. I'd like to see a little bit of a higher low. But if we come in and we put something like the MACD on here, which is a momentum oscillator, right? You can see this big drop here, you know, big down. A lot of times what we'll see is some positive divergence start to come in with it, and we haven't seen that here just yet. So, you know, it's one where if I were pretty comfortable we'd see a V-shaped recovery in this market. Nike, all right, all aboard, let's go. Buy as much as I can and go. But you know, with not expecting the V-shaped recovery, I have to wonder, does Nike come up here to about 77.5, dip back down here to 74 before moving on higher? And that's kind of what I'm expecting to see. So there's a little bit of room to the upside still. I could get in, have a semi-decent risk factor, but I don't think my reward factor is huge here just yet. Also in this space, you know, what I kind of put is some of these more U.S. tied, you know, domestic type plays. And I know Nike is a global brand and all that, but you know, these stocks that have moved back to the 200-day moving average, that were just massive bullish runs, like a Nike, and just pulled on back to the 200. In fact, let me throw it on here for you. You see, come on back to the 200-day moving average, getting its bounce off of that. Well, Lowe's is in that category, down on the 200-day moving average, getting its bounce off of that. You know, with Lowe's, I'd like to see a KD signal come in to be able to trade it. That's not going to happen, you know, anytime soon. But you know, Under Armour in that category as well. I look. I mean, we've talked about Under Armour for a long time, since late last year. And that this is a turnaround story. I mean, you remember all the news back here in November after this earnings report? I mean, if you follow the name and you remember, it was ugly. It was ugly. Put in a pretty good bottom on that. Ugly, ugly, right? And we see that happen, you know, with many stocks over time. I haven't really had much of a chance to trade it. Haven't had a lot of signals that I've been comfortable with. We've had this nice little kind of descending channel here on it. Nice little gap up. For me with Under Armour, I just need to let it play out for a little bit and get a decent risk-reward scenario, right? Because could it come and fill this gap? Yeah, it could, right? Could it just shoot on up? Yeah, it could. I don't have anything where I can go, well, I can buy it off this level. If it holds this, boom, go. And so for me, path of least resistance in the ultra short term is consolidation, but longer term, to the upside there. And then I throw Walmart into this category here overall. Now, I'd like to see Walmart's earnings before making a trade on Walmart, and those earnings are going to be coming up here this month. All right, so Nike, Lowe's, Walmart, Under Armour. If you kind of stay a little bit U.S. domestic, you've heard me talk about Chipotle Mexican Grill, and it triggered on the trend rider here on Tuesday. I decided I'm going to wait till it dips a little bit, gives me a higher low before I go and jump in. So far, it just isn't. So far, it just continues to want to rally and continues to want to push on higher, which is fine. Which is fine. I don't mind that, but I still want to buy this on a higher low. And I do expect that will come in, but it's probably not going to come in till the middle of this month, here overall, given the fact that it's kind of had some of this short-term follow-through on it. I lump Pepsi into this, but with Pepsi, I'm not in that I'm only willing to buy calls camp. For me, Pepsi's like Caterpillar. I'm willing to play it both ways. Now, with Pepsi, I'm more bearish on the fundamentals than I am with Caterpillar. Caterpillar, I'm very bullish on the fundamentals. Pepsi, I think, is severely overvalued. But this is a stock that, has shown a strong history of trading at overvalued levels. I'd prefer to play puts on Pepsi over calls, but have not had a setup here of late. I think this is kind of a counter market play and kind of one of those where it does march to the beat of its own drum. And I haven't seen anything to give me any reason to buy puts on it here just yet. Or say, all right, I can expect those to pay off right here, right now. But, it is on my watch list. They're willing to play it both ways. And then one I'm only willing to play higher is Visa. And I'm extremely bullish on Visa. It's one of those stocks. Since its IPO many years ago, it has hit a new high every single quarter. Now, eventually that will break, but it has hit a new high every single quarter. And so if there's a stock out there that you're going to bet on hitting a new high, yeah, there are a few that might be better than Visa that I can think of, but not many. And, it's going to, have some movement with the market and all that. And the options aren't exactly cheap right now. But on my bullish watch list, I'd love to see a KD signal come in and be able to trade Visa off of that. Okay. So those are some that are on my watch list and kind of what I'm looking for in order to trade them. Some of the other things that are on my watch list, but I'm not going to break them down to what I exactly want to see, here going forward. But in the energy space, Halliburton, Devon, both on my list as far as for the challenge and being willing to trade. Exxon, also on my list. Exxon triggered a bullish KD signal yesterday. I was kind of shocked because KD signals typically don't happen after this type of drop. Right? Normally, a KD signal is going to come in after a big drop. It's not going to come in after the first pop. It generally starts to come in a little bit later. So I was pretty surprised to see it. I wasn't willing to buy it, yesterday. It did sell off a little bit into the close, but this is one where, we backed this chart out to a weekly. Right? You see this consolidation that it's had. This is a long consolidation. Yet we had the extra bear market in oil and energy names at the end of 2015 and early 2016. But it has stayed in this many multi-year consolidation here. And, at some point, at some point, I do expect that to break. And if we do look at it, we are dealing with some higher lows. And so Exxon, very intriguing to me. Always like the option values when it comes to trading Exxon, and high on my watch list. And then ConocoPhillips, which has always been one of my favorite in the overall oil and energy space, and one that I'm definitely willing to trade with the right setup there. So those are the energy names on my list. Healthcare, I don't trade a lot of healthcare. In fact, I have to have an absolutely perfect signal to do it. UNH triggered bullish on Katie yesterday. I looked at some of the option prices, where it was. I wasn't willing to add exposure, here with it, but a stock that probably goes and sets a new high here this quarter. Yeah, UNH. Options, any of these healthcare names, they can be hit or miss from a day-to-day standpoint in terms of the spread. Perhaps my favorite in the entire space is Amgen, and this is one where I'm only willing to trade it for the challenge on the absolute perfect signal. It can be wet and wild there. And then Gilead, which is one that I like Amgen better. I like UNH better, but willing to trade Gilead on the right signal just because of how it can move and, just some of the personal success that I've had in this stock over the last year. Pretty good taste in my mouth here with it. Okay. Industrials. I know I mentioned CAT, but I'm not lumping CAT into the industrials. But in terms of the industrials on the watch list that I'm willing to trade for the challenge, Boeing, UTX, and General Dynamics. I think General Dynamics, it deserved to go down. It absolutely deserved to go down on that earnings. This far, no. And so if we get, kind of what I'm looking for the banks where we get this rally and then we set a higher low, I'm absolutely willing to trade General Dynamics back to 190, which is ultimately where I think it goes. And, you say, well, why UTX over Triple M? I liked UTX's earnings much more than Triple M's earnings, and I would not be surprised to see Triple M come back up to UTX come back up to these highs. I would be very surprised to see Triple M go back up to its highs based on the earnings report. Then last but not least, the tech sector. And, the stocks I'm willing to trade in the tech sector, Adobe, which I'm very, very bullish on. I think this, you talked about Visa and good chance of hitting new highs after this correction. I think Adobe you can lump into that category and maybe even say it has a better chance than Visa. Microsoft, willing to trade Microsoft here. I do like that Microsoft's finally pulled back a little bit. The valuations on Microsoft have come in a little bit, but it's still expensive. If this is a market where I'm looking and going, okay, market's about to roll over, Microsoft's one of those I'm willing to short. And then Apple, which I want to see the earnings report. I'm not willing to get into it ahead of the earnings. I want to see what the earnings report looks like and the reaction looks like, but we'll be willing to trade this in the coming quarter no matter what. Twitter, willing to trade this. And this is a stock that, how do I put this? I think the volume pattern in Twitter suggests that we could save $50 a share on Twitter. And I know that's fundamentally absurd. But I think this is a company that still has some juice to be squeezed here. They've made some nice little changes. And the volume pattern itself, this volume pattern that it has had over the last week and a half, that's the same volume pattern it had back here at the end of January into February. And, you can see what transpired afterwards. It's always still going to have down days. But for the next 6 months, what's going to be the path of least resistance for Twitter? Probably higher. And any kind of dip is probably very buyable when it comes to Twitter. Next tech stock is Micron. More than willing to play this. I think this is something that has a decent chance of snapping back to 50. I'd love to buy it on a higher low. We've seen a lot of bad news come into the space here of late. I can't help but wonder if it's not a bad news bottom. Western Digital, I think, is a very interesting way to play a possible bad news bottom here within the space. But with Micron, I want an absolute perfect signal. And generally, if I'm going to trade Micron, I want it based on my hourly chart, more than anything. And then last but not least, Facebook. This has not been on my watch list for a while, but has been added after this most recent earnings report, and something that I do expect path of least resistance to be higher overall. I would like to give it a week or two, let some of the earnings shake out of it, and would love to buy it if it's able to kind of hold on to this 150 level into next week and be able to trade it off of 150 and ride that next move back into the 167, 170 area, which is ultimately what I'm looking at for Facebook. Okay, so these are the stocks on my watch list. These are the stocks that I'm watching the closest on a day-to-day basis, looking for trade opportunity and saying, okay, do I want to put some risk reward on this? I don't have a lot of confidence yet that I can go buy something and it's going to do something all that different from the market. Yes, we see some things doing some different things from the market, but overall, the differentiation has been low. Now it will start to increase going forward. On the market vibe, if we see the market vibe turn bullish, that'll signal to me, hey, high differentiation. You can kind of go after individual names a little bit more stock picker like than, oh, well, you got to catch the next 40 points on the S&P because that's going to determine which way your stock goes right away. All right. So anyway, those are the stocks on my list. Those are what I'm looking at. Some of the things that I'm looking for, again here today, could I go get into some FCX with this setup? I sure could. We'll see kind of where it lands here by the end of the day. But that is a very interesting setup, along with ConocoPhillips, along with Micron, but not exactly a great risk reward scenario there for Micron. So hopefully that helps you understand kind of some of the stocks I'm watching here. I never consider my watch list to be finalized. It's always evolving and shifting and changing as we get earnings and as we get different things that transpire in the market. But anyway, those are some of the things that you'll probably see me trade more aggressively come the end of this year. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.